Welcome to the Explainer. So, you're starting from scratch with your finances, or maybe trying to recover from a few financial hiccups in the past? Well, you are in exactly the right place. Today, we're tearing into the definitive playbook for active credit building strategies. We're going to literally unpack the tools designed specifically to help you build or rebuild a really powerful credit score.
Okay, let's dive into this. Here is the playbook we'll be following today. First, the credit catch-22. Then, secured in starter cards. After that, credit builder loans. Next up, using non-traditional data. And finally, putting together your action plan. Let's get to it.
Starting off with Section 1, the credit catch-22. Now, this is a super relatable problem, right? How exactly do you prove you're a trustworthy borrower if literally no lender will give you a chance in the first place? It's maddening. When you're what the industry calls a credit ghost, meaning you've got zero history on file with the major credit bureaus, the whole system can feel incredibly rigged against you. But as you'll see in a minute, just ignoring the system, yeah, that's not the answer either. Now, what's really interesting about this slide is it busts a massive misconception. So many people think, hey, I live within my means, I have zero debt, so I don't even need credit, right? Well, actually, scratch that. The truth is, having no credit actually costs you money. If you're a credit ghost, people like mobile carriers, landlords, and utility companies see you as a total unknown risk. And because of that, they might slap you with hefty security deposits just to turn on your electricity or give you a cell phone plan. Basically, doing nothing actually gets you penalized. Moving right along to Section 2, secured and starter cards. All right, let's talk about starter cards and retail store cards first. You know, the ones for gas stations, retail chains, department stores, stuff like that. These can actually be fantastic stepping stones because lenders are often way more willing to hand these out to folks with no prior credit. You usually just need to be 18 to open one. But, and this is a big but, you really got to be careful here. They almost always come with much lower credit limits, think maybe $1,000, and significantly higher interest rates. Plus, you're usually skipping the fancy rewards programs. You absolutely have to watch out for those exorbitant financing fees if you carry a balance month to month. Now, if a starter card isn't really your vibe or just isn't an option, you need to understand the difference between an unsecured credit card and a secured one. With an unsecured card, which is the standard type most people know, you borrow money up to a limit the bank approves, meaning the lender is taking on the risk. But with a secured credit card, you, the borrower, are actually providing the safety net for the lender. It works exactly like this. You make a cash deposit straight to the bank up front, and that exact deposit amount is what dictates your purchasing limit. So you want a $1,000 credit limit, you put $1,000 into a locked account. Bam! Your purchases and your payments on this card are then reported to the bureaus, which helps you establish a rock-solid history. So the absolutely crucial point here is that a secured card is not a debit card. When you swipe it for groceries, the money doesn't automatically drain from your $1,000 deposit. You still have to manually make a separate monthly payment to pay off your credit card bill. And if you drop the ball and fail to make those payments, the lender swoops in, takes your deposit to cover their loss, closes your account, and your credit takes a massive negative hit. The whole point of this tool is proving you can reliably make regular payments on time. Which brings us to Section 3, credit builder loans. These are slightly counterintuitive, highly structured tools, mostly offered by credit unions and smaller banks. Let's walk through it step by step. Step 1, you apply for the loan. Step 2, here is the twist. Instead of handing you cash, the lender locks those funds into a savings account. Step 3, you make your monthly payments for anywhere from 6 to 24 months. And Step 4, once it's all paid off, the money is released to you, often with a little interest. It's like you force yourself to save money and you generate a fantastic credit history reported straight to the bureaus as a completely free byproduct. Pretty genius, right? Next up, Section 4, using non-traditional data. Let's see how this builds up. Historically, utilities and landlords never reported your good on-time payments to the major bureaus. They only ever reported you if you messed up and went to collections. But today, the game has totally changed. You can literally turn your everyday bills, rent, cell phone, utilities, gas, even your streaming services, into credit score fuel. One of the absolute premier tools for this right now is Experian Boost. This is a completely free feature where you securely connect your bank accounts right to their platform. It scans your transactions, picks out your qualifying everyday payments for things like utilities, telecom, and rent, and instantly adds that positive history right onto your Experian credit file. And the best part? As soon as you do this, an updated FICO score is delivered to you immediately. It's basically instant gratification for your credit score.
And hey, Experian definitely isn't the only game in town. You've also got the FICO expansion score, which specifically looks at non-traditional data. Then there are private web-based self-help services like Connect, which used to be called PRBC, where you just provide your data directly. There's renttoreporters.com, where renters actually pay to have their rent payments officially verified with their landlord and sent over to the bureaus. And don't forget the Anthem report from CoreLogic, which pads your thin file with alternative payment history. You have the power to self-report now, and it is a huge deal. All right, wrapping things up with Section 5, your action plan. Okay, so before you start building anything, you absolutely must check your baseline. And don't worry, requesting your free annual credit report will not cause your score to drop. Just head over to annualcreditreport.com, that's the only federally authorized central source for this, by the way, and pull your free reports from Equifax, Experian, and TransUnion. Check them for errors and know exactly where you're starting from. It's mandatory step 0. Once you're actually actively building, you got to stick to these golden rules to maintain that score in the 300 to 850 range. First off, pay your balances on time, every single time. Keep those balances low. And here's a pro tip a lot of people miss. Keep your unused credit cards open. Closing an old account literally shrinks your total available credit, which increases your utilization ratio and actually hurts your score, assuming they aren't charging you heavy annual fees, of course. Oh, and one last thing. If you have a highly trusted family member or friend with awesome credit, ask to become an authorized user on their account. Their positive payment history will basically piggyback right onto your report too. So what does this all mean for you? I want to leave you with this final thought and challenge. Which active strategy are you going to activate today? Whether it's grabbing a secured card, setting up a credit builder loan, or just taking 5 minutes to plug your streaming bills into Experian Boost, you now have the playbook. The tools are literally right in front of you. It's time to take control of your financial future, wouldn't you say?